This is the chart of Fannie Mae stock, and you can tell it had a pretty rough go from 2008 until about now, but this stock is finally alive again, back to $10. The administration is talking about taking this public. Now, this is a public equity, but we are going to tell you what they really mean here and what it's going to take to move Fannie Mae into the future. Take a look back at Fannie Mae in 2006 here, and you can see the book value of equity is positive, just like any other bank would be, and it trades on a multiple of that. Now look forward here after the housing crisis in 2008, and you can see that it went massively negative. All of the assets that it held on its books went well below value, and the government had to take this over. Now, why did the government take it over? This negative book value would imply that this is very, very bankrupt. And instead of letting it go bankrupt, they basically said, we can print our own currency. We own this now, and it will not go bankrupt. A couple other things on the past here. You can see when book value went negative, the market cap of the company, that's how much your equity is worth, went near to zero. It stayed there for decades. Also, take a look at how negative this business went in 2008. They did technically negative almost 12 billion in revenue and lost 60 billion in net income. If that melts your brain a little, it's because it is nearly impossible to do negative revenue and even harder to lose more net income than you did in revenue. This thing was a complete mess. If you've been watching our videos and want to invest alongside us,
click the link in the comments. Select your brokerage.
Search for ticker RVER wherever you buy stocks.
Thank you, and now back to our video.
Let's take a look at present day Fannie Mae. You've got a negative book equity value of about $113 billion. The market cap has jumped substantially. This low $4 billion market cap has jumped to $62 billion. What it seems to be anticipating is that the administration is going to fill this hole somehow. Two ways to fill this hole. One is just with some sort of government giveaway where you give them $100 billion or buy a bunch of their assets off at the wrong price, essentially creating a positive book value of equity the same way a bank would do. The other way you can do it is by selling shares. So the higher the shares go, the more likely you're going to see a share issuance, and that's going to fill the book equity hole here. So both of those ways would take it public, even though it's already currently public, and fill this negative book equity so that an investor can actually judge this stock as a normal bank or a normal lender. So time will tell if the administration is able to jump life into Fannie Mae and also Freddie Mac equity by pushing book value of equity up into the positive range so investors can actually buy this company like it's a normal bank or normal lender. We'll see what happens with details as they come out. Thanks as always for the likes, the subscribes. If there's anything you guys are looking for, let us know. We'd be happy to help.